Hey,
I mean, what can you say?
volatility. Our
I
friend.
mean, that's the kind of
Is
week,
it our friend? Is it
the kind of
really?
month, probably the kind of year we're going to have, right?
Yes. All year. All
I
Josh
predict,
does is
though. I still
win.
predict. I'll predict. I might have been 3 months early in predict my prediction of June, but I mean, I still say something is going to happen one way or another in June. We'll see.
Why June?
See,
Why
I
June?
had to wear
Just
my
a
Day
lot
of the
of
Dead
different
shirt.
things that a lot of just analyzation of a lot of different things from different directions. It all seems to land right there at June for me. So we'll see. We'll see. Like a good ape, I can't give you specifics. All right. So
Oh, what?
all right. So you guys,
Speculation? What?
no, there is accumulation of knowledge. It's just can't pull it out in the different compartments in the head. All right. So
gotcha.
here we go. This is After the Bell, by the way, if you just stumbled into whatever is, what the heck are these guys doing? And this is Arbitrage Trades After the Bell. And it is on a Wednesday. And it is yet another volatile, crazy, what the heck's going to happen tomorrow or even the next hour to affect all the markets. So it is definitely tariff territory.
Terrifying.
Tariff.
Yeah.
Oh, I like that. You need to copyright that before anybody gets it. Terrifying.
That I
Terrifying.
know. I now know the titles of Sunday
Yeah,
seminar.
that's right.
Terrifying.
Uh-huh.
The next Sunday seminar by Royce Wells. All right. I am Darin Harper, and we've got the banker JPM that's in your top right screen, and we have our fearless owner, Royce Wells, Quanticus Maximus, down in the middle now. The middle bottom quadrant, which is not really right because it's
had to get rid of
one
that
of three.
That other guy.
Yeah, it's not a quadrant because it's one of three. Yeah. So the other guy's not here because wouldn't you know it, Asian technical difficulties.
Yeah.
All right. So I mean, it's with all the tariff going on. Maybe his service got tariffed so much that he couldn't afford to pay it anymore. Maybe that's what it is. I don't know.
Mm-hmm.
Who knows? So let's jump right in. We're going to talk about basically, like we always do, the tail of the tape, the market, etc. We get to talk about the person that wrote it, which is not here, since he's not here.
Go.
You know what? I forgot to do it. I should have done it. Man, this was the perfect time to do it. I could have kept the 4 quadrant and had his picture up, his little picture from when he was a baby. The whole time. Dang
what were we thinking?
Hey, we don't want to get canceled.
I missed it. I missed it. I know. I'm trying to see if I can still pull it up. No, I can't. It's on the 4 square one. All right. So anyway, yeah, I know. Next time, just y'all help me remember to do that.
I won't remind you.
A lot. I know. So we got a lot of T's going on here. We got Trump. We got tariffs. We got turbulence. And
little Tesla.
Yeah. SPY hit correction territory this last week. What did it get down to? Was it 13% correction or from the highs? I know it was around
11, 12.
Yeah.
Oh, 11, 12? Okay.
Yeah.
All right.
Yeah.
I was just pushing it.
Wishful thinking.
Bitcoin, what's it at now? It hit below 80 again.
I think it's back up to 82.
I knew 82, 83-ish area. I just didn't know.
Let me check. Bitcoin.
What have you done for me lately, Bitcoin?
83, a little over 83 right now.
83. So yeah.
Okay.
It's trying. Right. It's trying its best.
It's definitely sticking around the 83-ish. And the dollar, I said I'm not supposed to talk about it, but it's 103-ish.
Hey, we don't talk about the dollar.
I know. But actually, Daniel did a deep dive on it, actually. Which is in tomorrow. Yeah.
I'm canceling all of you.
I had no choice. I had to just follow along as the host. And then this whole thing with the Europe, the euro, right? I mean, the euro's got a lot of strength, right? Kind of talk about the euro, Royce. What's going on there?
Well, remember the euro is the number 2 world reserve currency. That was the reason it was even brought online. So that way, basically, you can go between the countries in Europe and basically have pretty much the same currency, right? Because of that, with all the things that have been going on in Europe lately, it was being beaten up quite nicely because the dollar was progressing, but the euro was declining. Well, since then, basically, it started fighting back, and its fighting has basically had a very horrible impact on the U.S. dollar, basically making it lose about six or so percent of its value. So it means it's like our dollar lost about 6 cents to Europe, which I guess that's fair. $1.10 is pretty much where it's supposed to sit in the pecking order. Typically, Great Britain sits at about 125. The euro is about 110, and the dollar is about 1, right? Against the dollar, right? So where it's at now, it's basically it got back to 109, almost got 110, couldn't quite claim it. So now the question is, with everything starting to bounce, will we see another sharp decline? Is this a dead cat bounce? Because quite literally, that 6% gain happened in a 2-week period. Forex, at least the euro pairs and the USD pairs do not move that fast. And the fact that they did, that's making me think, okay, sharp turn up so that way you can fall down further. So be careful out there. Hold on to your euros.
Well, I think isn't Germany the reason for all of this? They did several moves within the week. I remember
And Poland. Germany and Poland.
Poland actually matters.
Oh yeah.
Okay.
Oh, wow. Yes, it definitely matters.
I know. I'm just talking. I guess because it all filters into the euro. So yes, everything matters from all the states. Don't at me,
in here.
Polish people. Do not at me. Just don't take off all your clothes. I referred to just a song just then. It's getting hot in here. Okay. Anyway. Yeah. Just move on, he says.
-1.
How can you be -1 if you're at 0?
First time we have someone with less than 0 on
that means I owe you.
Bad tip on you.
Yeah, that means I owe you now. All right, so let's move on to we still need to continue on this theme of the dollar. Sorry, but that is one of the things that was, kind of brought up by the millennial. That's why, you know what? That's why he's not on this week. He knew that it was foreboding. It is foreboding to talk about, and it was like you put half the agenda is about the dollar.
Well, it's like not to quote I guess Ever After. It's like choose your words carefully because they very well may be your last.
Mm-hmm. Even if you're repeating someone else's words, I'm gonna walk gingerly here. Or we'll just fly through this segment.
It's like,
is what we'll do.
Walking on sunshine.
Yeah, that's right. I was going to say with the euro, at least we didn't hit parity. I mean, there was that talk for a little while. There's going to be parity.
But Japan is coming right behind us. Japan is right behind us.
Yes. Mm-hmm. In fact, did they cut? They cut. Or they raised it?
They raised it. They're going to continue to raise. I don't think we're going to get to an equilibrium until I literally see GBP JPY somewhere around 145. Currently, it's trading at about 192. So, I mean, there's about 5,000 pips out there to be claimed before Japan levels out, equals out, and people stop using it as a punching bag.
Right, and there's still lots of reports out there that say that
the carry trade is not over.
The carry trade is not over. That it's about half over, if that. So we'll.
Not even half.
Yeah, exactly. A lot of people saying it's tip of the parity.
Tip of the yen. I mean tip of the yen for you.
Thank you. I just got distracted with my own stuff here. So foreign exchange strategy argued that the dollar safe haven reputation could be in jeopardy. I know. Am I now going to lose it? Remember, not my words.
Who said it? This
is actually from someone who's not here. Actually, it was Sarah Velos, which boy, I can't remember where he was from. Probably one of the big brokers or whatever. But he said that as the U.S. shifts away from protecting Europe and free trade, the geopolitical order could shift away from the dollar. Now, that just means that he's got to play in somewhere. It's got to be the reason.
Yeah, no, that's not happening.
That's not happening. Exactly. That is not going to happen. I mean, it's just a temporary thing.
When people get scared, that's literally why the stock market crashes. Everyone cashes out of their stock and goes straight to the dollar.
Right. So how are our treasuries involved with this? With what's going on right now, Royce? Give me a treasuries for dummies breakdown of the bonds, the yields, how this all works in. I mean, what are we looking for? What do we need to have happen as far as our treasuries go and these countries that own our treasuries? If you could do like a quick rundown.
Like we're in no danger. We're in no danger. Like basically, the reason we even have bonds, it's basically a safe haven for your money. You basically are trading your money. You're giving governments a loan. That's all a bond is. It's like, hey, a 10-year note, 15-year note, 25-year note, 50-year note. You're literally giving a loan to the government, and basically when they come due, they're promising you an X amount of return over that many years, year over year. So that's basically when you see yields up, that just means, hey, we definitely need money. Right? Okay. So they're like, hey, we're offering high premium if you give us money.
Come to us. Yeah,
come
to help finance our debt, please. Because that stuff is actually about to come up here like soon, and that's why everybody's panicking. And so who do we owe? Do we owe the big banks? Is that who we owe for this? I mean,
for the most part, I will say no. It's not the banks. It's not even the countries. Okay. It's not even the countries. So like everyone talks about China, and they're like, America owes China so much of our debt.
Right.
So of that, what is it, 38, 39? What's the trillion?
And growing.
Right? About 5% of that belongs to China. And to be fair, that's a lion's share. So most of the time, it's spread out mostly, I won't say even, but it's spread out across the globe. So to have one person having 5%, that's quite a stake, because typically it's about 2 to 3% at max. So yes, China having 5%, that does basically say, why'd y'all allow them to basically get so much of our debt, or why did we go and borrow so much from them? But at the same time, it's still only 5%. It won't break us. It won't make us cash out and have to go sell and give them our land or, our resources.
Okay. I heard, and it could be, you know me, I'll bring in whatever somebody says and see what you guys think. Yeah, but that Canada sold all their gold. Have you guys heard that? Is that true? That Canada sold all their gold?
Not true.
There's no way that's true.
Okay.
There's no way.
And then, of course, that's why this is going to be the 51st state, right? They're gonna. Plus, we don't even. I mean, there was that whole thing about Fort Knox, no gold there, and that it got sold, and now they're trying to recover it back throughout the world, wherever it got taken to. Who knows? We don't ever talk about conspiracy stuff here, so I'm not.
That's absurd.
I'm not going to bring it up.
Get out of here.
Well, all right. So
I'm going to start asking you to cite your sources from now on.
Yeah, we don't want that.
People have been asking me to do that for years. I know how to tap dance. I know how to tap dance. There's lots of videos on YouTube. All right, so let's go to the banker. Anything you want to add into the few things we just talked about?
Well, no, I mean, just kind of want to go back to, the same thing that we've been talking about. It seeming like every week for the past few weeks is like how much uncertainty has been injected into this. And like the one thing that a market needs to be stable is confidence. Like the one thing an economy needs to be stable is confidence. And
we have a new president.
And that is why we now have zero confidence, and why a lot of other nations now have zero confidence in the dollar. And that's why you're seeing this kind of, it's not a mass exodus, but again, to the point that we were just making about how the euros crept up, the dollars crept down, it's because people are starting to find something that's a little bit safer, maybe even moving it to something more, a little bit speculative, like some of these emerging markets and things like that. Just because what used to be this stable place to lay your money was the dollar. And now that we have introduced so much, and it's not that we're doing it, I guess the biggest issue I think that other countries are having is that we're not doing it diplomatically, and we're doing it seemingly on a whim. It's like, I think last week when we were doing our stream, we were talking about the tariffs, and I think like halfway through our stream, we went back between Canada tariffs, Canada not tariffs, to back to upping Canada's tariffs, all within like the 1 hour period that we were doing this. And it's just if you can't predict it, it injects a massive amount of uncertainty, and markets don't like that. I don't want to put my money somewhere that I have no idea what's going to happen to it. I'm going to give it to somebody that I can trust that's going to build it up. And so that's the biggest issue. And you look at all of the other things that, like euro, they may not, they're having their own issues. They've got problems with inflation, and they're dealing with the same kind of nonsense that we are. They just don't have all of the other geopolitical drama that we're dealing with. So people are kind of slowly looking at that and like, oh, that might be a little bit of a safer place to go right now, since now, the dollar is no longer the safest place to go.
Well, I don't forget the metals tariffs now that just started today. This is Wednesday, by the way, when this is being taped, and that's yet another one, and the reciprocal tariffs that are going to happen because of that, which could drive up inflation. I personally think, this is all rolled out right after Davos meetings, where all the leaders. Yeah, I do, because if you, again, just spend your day one day, because you have all the time in the world, right?
All the time in the world. I'm never doing anything.
To just jump down WEF's hole. And then jump down UN's hole and see how many they match. But anyway, just jump down these world leaders, and I think the banks are working together, and all this is a bunch of BS. And the 103 right now was planned and executed, and it'll go right back up, and everybody will be happy, and everybody got down at the lower price, and then they get more money when it goes back up to 110. I think it's to me, it's just an orchestrated pile of what from the elites throughout the world that after the meeting, not to oversimplify it, but just my own opinion, of course, not a financial advisor.
So I got a question for you.
Oh,
okay.
And
this is a loaded question. It's to both of you guys, right?
Okay.
What's the best way to pay off your debt? If you had debt, if you were a country, how would you think they would tackle paying off their debt?
I mean, the traditional answer would be like GDP.
It has to go through the dollar, right? I mean,
it's GDP and all these things, right? So we're talking about inflation, and we've been talking about inflation a lot, right? The easiest way, and this is speaking with my economic hat on as well as the tinfoil hat, right? The quickest and easiest way to pay off your debt is to inflate your own currency, which means dollar gets weaker.
Germany.
Pay them back with the inflated, and then basically say, hold on to that. And then they bring the dollar back, and now everyone's paid off. And technically they paid them at a discount, but now the dollars are worth what they originally were worth when they were lent out.
I mean, inflating away
what
debt
I was
is a strategy that's been used.
A little bit of what I was saying.
Yeah. I mean, that I said that inflating away debt is an old strategy that they've used plenty of times. I definitely agree with you on that one.
So it seems like this is all smoke and mirrors. They're like, hey, we got 39 trillion worth of debt. Let's have a little bit of a haircut, and you do it first, and then I'll do it, and then we're good, right?
I feel like you and I both agree on this for sure, because I was talking about the orchestration and the down to 103 and then back up and to try to let everybody catch up. I mean, I agree. I agree.
And,
So we'll move on while we still agree.
And we're coming to the end of the quarter, right? We're coming to the end of the quarter in the markets. So basically, if they're going to try to justify another interest rate cut, things have to be doom and gloom. Otherwise, they don't have a reason to cut. They're like, typically you only cut to basically give the people relief so that way they would be willing to spend more, and it's cheaper to borrow money. So you got inflation working against us, or maybe with us, depending on what the goal is, right? And you're lowering the interest rate. So once again, these are all little injections into the economy trying to force people to spend more and basically also pay back our debt. The other thing that basically makes this a little bit sketchy, I won't, use my teenage daughter's sketch, is the fact that loans, people's credit cards, they're maxing them out. Like used credit is gone through the roof over the last 12 to 14 months because no one's gotten a raise. Inflation is basically eating, and people are, well, I have this card. I've even had like on 2 of my credit cards are like, congratulations, we've raised your limit. I'm like, I'm still not using you. Go away.
Yep. Cars, real estate, commercial real estate. In fact, cars now lately it's just shot way up to like record delinquencies, and people are they're simply just don't care anymore, and they're just letting it fly. I mean, cars is usually the first thing you do because you got to get to work. That's the way you make money. And if anything else, I got to make sure my car works.
It's a gig economy. People are working from home. People are using AI. Come on.
Yeah. 5 people with 1 car kind of thing. Yeah, absolutely. Yeah. These job reports, though, I mean, we're not going to.
Come on.
Exactly. The job reports, and anytime it's like when they do these reports, they need to specifically when they do the narrative on TV and roll it all out. It's like, give us part-time versus full-time, please. And then give us the real what's going on how many jobs were created or lost, blah, 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 per person. And I think we would all understand a little bit better because they manipulate, massage those stupid.
Yeah.
I don't want to get started on
that's coming out today or tomorrow.
Yeah. Yes. Mm-hmm. Yeah. I mean, the jolts today. I mean, and CPI was today. And that's all of my 3 things tomorrow. I don't want to give everything up, but I mean, yeah, it's funny how they said, well, in January, CPI was 3%. It was raised 3%. So this month it was 2.8%, if it really was. So look at that. It went down 0.2. It's like, okay, but in 2 months it's gone up almost 6%, and we're supposed to celebrate that. Did our wages go up 6%?
Absolutely.
No. Well, it's like the funniest thing
it wasn't 6% in 1 month. Go ahead.
Like, it's going to put the Fed in an awkward position because we've got, I mean, it's now, even though everybody's been saying it for 6 months now that tariffs are going to create more inflation, it kind of seems like everybody's starting to buy into that, like, oh crap, tariffs are going to cause inflation. And so, but that's, months down the road. But then you've got the numbers, that all the job reports coming out and the CPI coming out and all of the metrics that the Fed has used for 2 years now, 3 years now, to say, okay, we can approve a rate cut. They're kind of stuck between a rock and a hard place because they know if they do a rate cut based on the current numbers, which is what it's kind of looking like they may actually do, those percentage of, that betting percentage of are they going to cut rates is slowly creeping up to getting a pretty sizable agreement amongst everybody that, yeah, we're looking at a potential for a rate cut. And then you go another 2 or 3 months down the road and inflation creeps back up because of all these tariffs that are not going away. And so then, are they going to raise them again? Or are they just going to, what are they going to do? And it's just, again, I keep going back to the same argument. It's just injecting so much more uncertainty into everything. And that's why it's causing all of this uneasiness. And then, markets are subsequently reacting to it.
So should they just throw their hands up in the air and say nothing and say, hey, we'll let this figure it out. We're going to leave everything where it is, stabilize, and then we'll cut maybe August, September, October?
I think that's what's going to end up happening.
They keep saying it, three rate cuts. They keep saying it now. And if they're saying it, that means it's probably not going to happen, in my opinion. They're saying it to achieve something, but it's not what is apparent. So I think you got recession is finally going to be admitted, and they'll have to admit recession and then do the rate cuts. So I mean, we'll have to see, because if they're going down 3, that means there's something wrong. I mean, we already know there's something wrong.
Or they're just going to continue to use the word correction, and then they're going to, oh, it's just a 15% correction. Oh, we're just a 20% correction.
Right.
Yeah. I mean, if you don't use the R word, then
I stopped at 20.
Yeah. If you don't use the R word, then nobody's going to panic.
You're right. It was 20 from where we were 4 months ago when I was saying it. You're right.
And everybody's like, oh, but in 2025, it's just 10%. Or it's just 11%, and we're not really in a recession. And then you look at the actual numbers and do the, you can count on your hands and do the numbers yourself, and you're like, okay, we're getting close to recession-ish.
Well, we've been in a Fred session for a long time. I just created that term because, I mean, if you look at those again, I should get kickback from Fred, the reports, because I'm always talking about them. They seem to be the most honest and non-filtered. Is the Fed reports. So we'll have to see.
You believe those, don't you?
Exactly. No, I don't. That's what's funny. I think those are even doctored, but
I'm like,
you yourself are a conundrum. Like, I love these numbers, but I don't trust them. But I love them, but they're accurate.
I think they're I just think they're
no, I don't trust them.
I think they're closer to the truth than what we get through the filtered media, for sure. Because they know that a lot of people don't go look at them. They know that very few people do. I didn't until about 3 years ago, with some deep diving I did back then, when I had, unfortunately, too much time. All right. So the millennial brought up Tesla as the next thing, and Elon Musk. With everything catching on fire, but I don't really want to talk about the geopolitics.
I want to talk about that one. I really want to talk about that one. Come on.
You do, really? All right.
That's the fun part.
Hey, it's your show. I'm just a little thing on it. So what happened was a lot of vandalization happened, and a lot of people now are going to jail for those, because it's funny, because I saw some mom say, what should I do? My daughter painted, and she was on this great camera that caught her, so there's no way out of it, and I think she's going to go to jail. And comments are hilarious underneath that. But so yes, I really want Daniel to be here, because he's Mr. Tesla many times. By the way, did you know there's a Tesla house? I just saw that a little that they're selling. So I mean, they're in a lot more than what people give them credit.
They're a whole lot more than Tesla Motors. But the media has been basically leading us to believe it's all motors. We can't get this car sale, so let's talk about Tesla Motors.
Media, there are so many shorts still in Tesla, right? I mean, it was like,
I don't know about that. It's been short.
You think it's out now? You don't think they reshorted it? I don't know. These hedge funds don't learn their lessons.
So please note, I kept on the hat. I'm not done.
Yes.
Right.
Okay. So I will go ahead and give us just a general statement of Tesla this week, Royce.
All right. So first off, we have an unmanned rocket that explodes, SpaceX. Ooh.
Right.
Not the first time that's happened to one of his rockets. Then we have in France, they torched an entire car lot of Teslas that were already having trouble selling. No insurance money involved in that, I'm sure. Sales are down. No, they're not.
Behind the scenes, they're we got our money. One way or another.
I'm just saying, it's awfully convenient that basically all these companies have insurance. It's not like they're flying without it. So when these things happen, it's like, okay, no one got hurt, and we need to make up something for the quarter. Sales are down by this %. Can we write it all off? Yes. Do it. But make it look neat. Make it look neat. And make sure you report it to the media, so the media sees like, oh man, he's doing this, and they sensationalize it, and everybody's happy. Everyone's happy, like he's getting his, and he's like, yeah, I'm getting mine.
Remember the bombs that were in the Cybertruck. So I mean, it's been going for a while. I mean, it's spaced out. It's like, what's going to happen next week?
Those are a blip in the radar when you're looking at like in Australia and Europe and California, where sales are down by like anywhere from 30 to 70%.
But we have to also remember the fires that went across California. So not many people buying cars if everything's on fire.
Well, I mean, it will because they'll need to replace the car, but yeah.
Yeah, well, but they have to have a place to buy them. If everything's burning, I'm sure other businesses in California also were impacted and lost a lot of revenue, specifically in California.
Yeah,
you're just talking about like a couple thousand units when we're talking about like 100,000 of worth of sales. Like, I mean, 100,000 deficit in sales. Like that's, I don't know. And I mean, but the biggest issue for me is like with this Tesla thing is you got to think about all the promises that they've made over. The only reason I brought this up is because one of Daniel's questions was like, is Tesla cooked? And there's yes, I get Royce's perspective of Tesla is just, you got to look at it as it's not just a car company. Like there's a lot that goes into it and a lot that props up the value. Even if you take all that into consideration, and even with their 50% haircut on their stock price right now, they're still wildly overvalued. But the biggest issue for me is like, what did they promise in like 2015? Like by 2015, we're going to have a $30,000 affordable EV for the entire US market. Never happened. In 2020, we're going to have full self-driving cars. Never happened. Then he wanted to. Then he was
happening in a couple of months.
5 years too late.
Hey, it's still happening.
I'm just saying,
and that's gonna probably be their flagship. They're like, it's fully autonomous. You can.
And then they had the long haul truck. Never happened. 1,000-mile battery. Never happened. All the robo taxis that they promised. Never happened. Like.
So what happens when they start rolling that out, though?
These are great. It's just like I'm shamelessly stealing this joke, but somebody made the point that Tesla is a promising company.
Nice.
Mm-hmm.
Well,
I mean, the thing is, in the weirdest part to me, and look, I throwing in a little bit of geopolitical here, but
there's where I was going.
Of all of the groups, would Elon attach himself to MAGA? Like, this is the same.
Well, for two reasons, probably. I'm sure there was a payday for it, right? He supported the Trump administration and the election that went on there.
Yeah,
they even got them coins. So Trump got a coin and Melania got a coin. Someone had to know how to do that. So I'm sure they leaned on him to figure out how to do that. And I'm sure he has a share of some of those coins as well.
Don't forget the freedom of speech X platform.
Yeah, but those coins are also have like they're lost 95% of their value.
But if you own them when they were practically nothing, you're still up. So going in, if it's 20 cents, it makes it to $50 and then falls back down to $4. You still made 300% return on your money.
But is that worth the $300 million that he spent on Trump's campaign?
Potentially, because depending on what they priced for and how much, its market cap got up to, I want to say, $4 trillion. So yeah, there was money to be made.
I mean, I get it, but I just don't see how you spend $300 million on Trump's campaign. You all of a sudden start aligning yourself. You do all of this let's just say off the wall things. And right. your entire wealth drops by like 30%, and he's lost like 150 something billion dollars. And now,
you don't think he's made that up someplace else? You don't just lose money. Billionaires and trillionaires don't just lose money. They basically, it's like, hey, I can write this off. I can write that off. I can write that. Losing money, it's just literally, it's a cash flow game.
Yeah, that's not. I mean, yes, I understand that, but that's not really my point. My point is like his next step seems to be in what happened yesterday when that little commercial on the White House lawn. Like, why is he trying to align himself with this group and completely alienate all of the people that built Tesla? Like all of these people who wanted to go buy Teslas, they wanted the EVs, they wanted the climate change folks, like all of his fanboys, and instead he's going to the gas guzzling, the same group that used to like ice all the Tesla chargers. They vandalized Teslas, and then instead, like now you're trying to like none of that group is going to go out and buy like a Cybertruck.
But will they go vandalize other people's trucks?
No.
He's not the only one. I mean, he's not the only one to align all of a sudden and seemingly flip over to MAGA.
Yeah.
I mean, you'll remember, was it the Apple guy? He flipped.
Yeah.
And he's really all up MAGA's ass, if you will. And that's what happens. It's all about money. It's not about my ideology. It's about money. And that's what's going on. And by the way, you touched on geopolitical. If you remember, Doge is out there picking in different areas that have exposed a lot of things about where our tax dollars and our grandchildren's tax dollars have been going. And a lot of that's been cut off throughout the world. And so the world is pissed off because their free money is no longer. So, I mean, that's part of it too. People actually did go out, and I believe activism as it is. And I do believe narrative too, Royce, but I think there's activism out there, which conveniently it'd be easy to make them activate, if you will, and burn all these Teslas throughout the world as a response to them not getting the free money anymore. So I'm just going to leave that little thought process there, because he's basically cutting off a lot of funds.
Yeah. Would that be impactful enough to basically go, okay, they're burning their own cars, they still got to buy a new car? I'm like, it doesn't make sense, at least in my brain, to burn your own stuff. You don't like them, fine, but don't go burn your stuff. Don't go burn my stuff.
That reminds me of when the Canadians were taking off all the Jack Daniels off their shelves, and instead of not ordering more, they were taking off what they had already bought.
That's my point. Exactly.
And stocking it up in their warehouse for when this is over, and they'll pull it right back out. I mean, it's just, but
that's a common misconception, because it's not actually like you can sell it back to the distributor.
Yeah.
You might take like a 10%, 20% restocking fee, but you can absolutely just sell it right back to the distributor, and it's a part of the agreement.
Yeah, just as temporary as these tariffs are, I think what the reactions are also temporary. So, I mean, it is a what's going to happen tomorrow X tweet economy right now, I guess.
They sensationalize it so much, though.
Yeah,
but I still say this: media is nothing but the hype guy.
Exactly. And it's been proven throughout the years, not just the last 1 year. It's been throughout, I mean, history. The media
it reminds me of Joseph, but we'll continue.
Yeah.
I said no last names. Get out of here.
Yeah.
I said no last names.
All right, Brandon, let's go ahead. We're going to go to let's you know what, he wanted to bring up China. I mean, it's a lot of BYD, Tesla stuff, so we'll jump over that for the sake of time, and go ahead and jump over to what I think a lot of people would like to see, which is Arbitrage Trade / Royce's analyzation of SPY. So we're going to go to After the Bell, Crayons and Charts with Royce Wells. And if we look at what he has pulled up, it is SPY. How did I know that? And let's talk about what's happening, where it's going.
Right? Okay. So we are sitting on top of a very, very large and steep cliff. And this, just to basically let everyone see where we are, right? All of this long buy that basically happened all throughout here. This is basically started at the beginning of 2023. And basically, this bull market, it was almost a 2-year bull market that we've been able to sit through, taking SPY literally from 392 all the way up to 608, 610. So, well, we got our first sell signals. Specifically, this is a weekly chart. So 3 weeks ago, before it fell from the sky, when it was roughly at $601.64, my arbitrage level indicator said, yeah, it's time to go, because all the deltas that had been leading up to this point erased all the gains that you had made over the last 6 to 8 weeks. So basically it's flat. So it was definitely topping, but then basically icing on the cake, we saw the red cell come up, and we saw the red SAR dots, the parabolic SAR, with an arbitrage's version, show up to say, yeah, this is the end. This is the top. We should definitely be taking our money off the table. But let's get some more perspective, because while this is perspective, let's continue on. This looks like it's the top of a hill, but this is our small band. This is our arbitrage band in the system. Let's go take a look at our apocalypse band to basically see just how far out and far from home we are. So once again, 674 might be the very top of this market if we could ever make it there. But if you look at this, we are all the way, and I do mean all the way, and we were literally sitting 3 standard deviations up, and nobody wanted to call the top. But here it is. There's the top.
I did.
I'm sorry?
I did. Sorry to interrupt.
Nice. But well, where's the bottom then, sir? Where do you call the bottom?
I say almost to 505.
Oh, I wish that was the bottom. That is nowhere near the bottom.
Ooh, okay. Hey, you're in my camp now. All right, let's go.
So I'm going to turn on 3DA, which is basically, it's a 3D map of all the probability that makes up all the bands, right? The smallest bands are saying, yes, we ran out of room. So basically 527 might be a potential bottom. But if we're using the arbitrage band, that can get down as low as 412. If we're using the novice band, that can get down as far as 260, right? And typically, unfortunately, we only go down to the pink. And the pink, yeah, that's almost a complete erasure of the S&P 500. So, and at this scale, this is a weekly scale. So that means we haven't basically been under this guy. We're going all the way back to the 2008 crash. All of this going all the way up. We've not been below that pink line since then. The COVID-19 crash in March, basically where it crashed, it held the line. And that's the closest we've been since then. So in order for us to basically, and using that as a benchmark every time we get there, the decision point, not even the bottom, the decision point happens at 361.21. So basically, if we did nothing and we held this price and did nothing and just stayed here, eventually probability would start to capsize on itself and then starts to force us towards that 361.21. Good thing, short term, if we're using our trend top and trend bottom, which we do sometimes, short term, basically it's saying, hey, relative bottom, that might be closer in line to what you want, around 540. So there may be another 4 to 5% that we have to go in the near term, but the longer term at this rate on the weekly chart using the apocalypse band, I'm saying we have a rough 18 to 24 months ahead of us. Let's hope it's not the entire 48 months of this presidency. That's all I got for you guys. Back to you.
All right. So my new prediction is 280. Here we go. That once it hits and all those algos start really selling, once it gets past that important crux, that it's going to fall to 280. All right. Any other predictions?
Nope.
You know what? I can laugh because you can make a lot of money on the way down. That's all I'm going to say.
Absolutely, you can. But they got to let you. So better start selling those options, folks.
But a little mini commercial in the midst of all this is just call Royce, figure out how you make money on the way down, because and just make your settings that we'll just do it for you with our AI bot, right?
Yeah, absolutely. Pips does the work for you, and you just collect the money every week.
There you go. Banker, anything to say about that 280 mark? I mean, the fall.
I mean, I pray to God he's wrong.
So does the world.
I'm just following. And an object in motion will remain in motion, while an object at rest will remain at rest. So it's already started free falling. I'm just saying what's been happening the last 3 weeks.
So I'm Tom Petty. How you doing? Free falling. But the thing is, he said both things could happen. So he didn't say that one was definitely going to happen or not.
Yeah, if you look at some areas and like some of the smaller charts, like there's a little bit of hope that it's not all gloom and doom. But that being said, I mean, what he's saying is also true. Like if we do get to the point where we're in free fall mode, it would be gnarly.
Yeah. It's that
and
that black swan we've been talking about, right?
Cuts, and a whole lot of people will be everything at discount because they're trying to do anything and everything to get people to buy again.
And I think that's a lot of what we've been saying over the past, 6 months now.
Exactly.
Where you keep asking the question, like, are we in some sort of new market or are we in some new level of insanity? Because everything is so wildly overvalued. I mean, traditional investment has been seemingly thrown out the window. And I mean, we were due for some sort of healthy correction at some point. And, we have been saying it on this show for weeks and weeks and months that something is coming. It was just a matter of when. And here we are. And now we're kind of to that make or break point.
Yeah, again, you've heard me say over and over again too that this measly little 10% is nothing, and you can see Royce just pointed it out. I mean, but if you have the commercial real estate crash, the real estate crash, the car loan crash, if you have all that happen at once,
AI bubble,
then you throw in the
AI bubble. I forgot about that, and then you just clean
on
everything up. Yeah, and it just something's going to. It's like dominoes. One of those is going to cause the other, and it's just going to tumble. And what is that? I'll tumble for you. All right, I told you we got to always have something. Sorry, Culture Club.
All right, yeah. Josh, did you forget to give him his medicine?
No,
I can't claim him.
Wait, let me get my pill box out. Oh, it's still in there on Wednesday. I haven't taken it yet. I am an old man. I refuse to pill boxes, though.
Yeah, I just need to personally apologize to Culture Club. Like,
make a good point.
All right. Well,
Arbitrage trade. We are very sorry for the thing Darin Harper.
It's karaoke day every day at Arbitrage. So speaking of apologizing, I apologize for all the words I've had for you, Banker, over the last now what is it 3 weeks? Yeah. So
he even Mel ordered a voodoo doll.
I'm glad you put voodoo in there. It didn't leave that word out. Some of you will get that later.
I'm just saying, somebody's got to step up. Like this is almost starting to get old.
I have not seen the Banker's never been a taunter. But he's becoming a taunter. Wow.
He's got a chair.
He's going to have his own ape.
His
own ape is going to start pulling from him. I mean, his own ape is going to start talking about him over and over again. He's getting out of control, Royce. Jeez.
Hey, we'll humble him. If ever we get a turn,
I think this week that head fills up more of that picture behind him. It is getting bigger every week. Pretty soon we won't even see that.
See the picture frame, right? He's gonna get 7 in a row, and
I mean, Hulk Hogan lives down the street. I've just been taking some tips.
So we've been hinting to this, and I'll pull the scoreboard up now for everybody to see. I'll just say the apes are. It'd be easier to say the apes are 3 and Daniel's 1, but I will say that I have nothing, Royce has nothing, Daniel barely has nothing. He's getting that -1 for not being here today. So it's just all Josh. He has 3 in a row. He has the 3-peat. And we'll go for rare air next week with 4. And I guess the big question is, have you picked something yet?
Yeah, you mentioned energy.
You've had lots of time.
This is kind of energy adjacent, former energy. But yeah, GE Aerospace. Just
okay.
GE.
What's the symbol?
GE.
Oh, GE.
All right. So we bring good things to life. All right.
Notice it's GE Aerospace now. It's no longer just General Electric.
Right.
So they're literally changing their focus of where they're aiming.
Yeah, they did the same thing that Honeywell did. We talked about that a couple weeks ago, like just doing the split off into.
Yep.
Anything to drive people to your stock. You split up your company 8 ways and blah, blah, blah. So GE Aerospace.
Interessante. Okay.
It's way up there too, just like S&P.
It is.
Yeah, this one I think has a little bit more indecision on it.
I'm going to turn off my SAR.
This be considered a competitor to SpaceX?
Yes.
Mm-hmm.
Yeah. So that's an interesting little addition to that.
And I'm going to bring out some more so that way we have all the bands chiming in on, what they see.
It's literally a summer fest because all the bands are there.
Yep. But I'm Come on, give me my numbers. There we go. All the bands. All right. Interesting. All right. So what say you guys? Looks like there's a consensus somewhere around 212 to 215. Right? That's the high end. Basically, about 4 time frames are saying about 211, 215, 225, 212 as a top potential. Okay. With a bottom side somewhere around 180 to 185. So 183, 185, 182, 185, 181, and with an outlier of about 167. So with that being said, let's look at about 165 to about 200. I mean 210.
We're doing crazy ranges again. Okay.
That's what volatility is. I don't control that. I can make it more tight.
Make it 40, so it'll be 10 for each person.
So it's gonna draw again.
205 then?
And this time it's much tighter. It's a $10 range. 185 to 195.
Oh.
Or 85 to 210. Let's do 85 to 210. 185 to 210. So that's a $25 range.
We'll say 215, right? I mean, try to make it. No, we have 4. So
yeah.
All right. So you said 185 to 210, 25?
Yes. Let's do 24. Let's do to 210. So that way they're $6 per person.
So 209.
Yes, 209.
Okay. All right. What say you, Mr. 3 in a row, 3-peat thinker, dude?
He's not competitive at all. I don't know why you say that.
But you know what? I should not. I should be very nice. I should be very nice because which is worse for him? Is it letting that person go next that just said those things, or
right? Oh, that's okay. Every week we've gone after him, so it's all good.
You give up controls to the evil empire on the other side. So which is it? All right. So we have, you said 6 each. So let me just lay it out there then. So we've got
185 to 91, 91 to 97, 97 to 203, 203 to 209.
Got it.
Ooh.
All right.
Kind of like, that's like right split on the number. Because I like that. Yeah, let's do the 197. You said the 202.
203.
203.
Good.
Yep.
Yeah, that works. I can make that work. Yeah.
Okay.
Hey, that's not the one I would pick. So
there you go.
but
I mean, I
next?
would let Darin go, but it hasn't really seemed to make any difference lately.
Well, that would mean you don't let anybody go because you're the only one that's been hogging it. So I mean, it's not, you still want me to win though for the sake of the team.
Okay, Darin, go ahead. At least I don't have. At least I know Royce is going third because Daniel gets punished.
Okay.
He's going last.
Exactly.
Yes.
Well, I say that all of those candles that have been above the blue line will now be below the blue line, and that blue line is going to act as resistance, and it is going to come downward. So you picked the 97 to 203. The only question for me is it going to be 185 to 91 or 91 to 97? So I'm going to go. I'm only going to go. We'll just take the middle. I will take the 91 to 97, and let Royce take the 185 to or 191 and below. Right. All right, Royce, what are you doing? You got to give it up now. I've already picked.
Taking the bottom channel.
I knew it.
And then you can have the top. Up and to the right, baby.
Yeah. He does say that annoying a lot, doesn't he? All right.
Yikes. Tell me how you really feel. Ooh.
All right. Now, if I was really mean, like I said, I would have thought about having his picture the whole time in one of the quadrants in this show. So his little was that his 12th grade picture? No, I'm just kidding. I'm just jealous of his youth look. All right, guys, let's wrap this up.
Like on that self-evaluation, team player. Nope.
I'm a team with doesn't sound like it today, but I'm a team with the banker there. We're both apes. All right. Let's get out of here so Royce can go make us some more money.
Absolutely. Why not?
Exactly.
Thank you.
So thanks, guys, for filling in for the lack of Daniel's input. And we still did okay, I think. And hopefully all the four of us will be back again next week. Bye.
Later.
All right.
Where are the Ides of March?
That's right. Ah!